Hi everyone, how you doing? My name is Equity Eric, and today is February 1st, 2011. Yesterday, BIDU was the front of headline news as they rolled out Q4 earnings for 2010, smashing analyst expectations. The online search engine that operates out of China jumped about 8% after hours after they had made their announcement, and with good reason. Investors.com goes on to explain their earnings and analysis by mentioning how revenue jumped from 184 million in Q4 of 2009 to 371 million in Q4 of 2010. A few other interesting stats. Revenue per advertiser in Q4 was up 56% from the prior quarter of Q3 2010. For the first quarter of 2011, BIDU expects revenue of 360 million to 371 million, which is up 90 to 96% from 2010 Q1. Analysts are forecasting 354 million for 2001 Q1. And don't be surprised if that number gets beaten yet again. The reason why I've drawn attention to this stock in particular is because this isn't anything new for BIDU. They are consistently beating analyst expectations and earnings estimates, and as we can see from the charts, their income statement reflects this quite well. We can see their quarterly revenues rising consistently, as well as their annual data rising quite steadily as well. We just take these numbers here. Let's take the revenue for the last 4 years. We'll plop that into the spreadsheet. You can see from 2007 to 2008, revenues rose 52%. From 2008 to 2009, 45%. From 2009 to 2010, 28%. Now we do see a downward trend, granted that, yes. However, anybody who knows growth stocks realizes that anything that's greater than 25%, that's showing year-over-year increases in sales, is something that you want to keep in your arsenal and that you want to have on your all-star lineup. The other reason why I decided to highlight BIDU is because it is a perfect example of what a growth stock looks like. If you don't know the term growth stock, or if you're not sure what to look for to ID one as ID a stock as a growth stock, then highly investigate BIDU and do an autopsy on its financials to figure out what is the criteria that makes it a growth stock. I highlighted a few key areas, which is increased revenues of at least 25% per quarter plus per year. And also, you want to see increased earnings per share as well, which BIDU definitely has. $18 in 2000, $30.19 in 2009, $42.70 in 2010. And I guarantee you that 2011 is most definitely going to see an increase as well, if BIDU maintains their consistent performance. I have to admit, I've purchased BIDU in the past before. I've also sold it, and as the making of this video, I currently do not own BIDU. That's my disclaimer for this video. However, I'm highly considering purchasing it again. Until next video, I'm Equity Eric. Stay hungry, stay foolish.